official amendment. I thank the presiding officer. I yield the floor, and I note the absence of a quorum.
The clerk will call the roll. John Sander.
In the Mideast was not remotely connected to the world as I see it.
What about his call to talk with Iran?
You know, at the end of the day, the goal is to disarm the Iranians' nuclear capability. This interim agreement doesn't dismantle one centrifuge. It doesn't remove 1 ounce of enriched uranium from Iran, and it doesn't deal with the plutonium reactor in terms of dismantling. The final deal should be no enrichment capability, no plutonium-producing reactor, and remove all highly enriched uranium out of the country as the UN calls for. The interim deal is so far away from what I think would be an acceptable deal. I'm very, very worried, and the sanctions are falling apart. Delegation after delegation is going to Iran to do business. They're beginning to crumble before our eyes. They're the reason we're at the table, but if we don't reinforce sanctions, I think they're going to fall apart.
3 times the president said he would act with or without Congress.
Well, you know, that's up to the president. One thing that was slightly encouraging on foreign policy, if he will leave a residual force behind in Afghanistan to hold the country together and not commit the same mistake we made in Iraq, I would support that. If there's no troops left in Afghanistan in 2015, the place will fall apart in a year. As to executive orders, the president's going to have to make that decision. I hope he will not bypass the Constitution.
How's your campaign going?
Good. So far, so good. Thanks.
Thank you, sir. And also from South Carolina, somebody who's returning to Congress, former governor, former congressman, Mark Sanford, a Republican of South Carolina. Congressman, your return, has it been any different than the first time around here?
Yeah, I mean, I think that one of the things that jumps out at you is the erosion or, I guess, destruction, if you will, of what was once called regular order. The whole idea of going through, you know, a yearly budget setting process in Washington is something that I saw when I left 13 years ago, haven't really seen since I've come back.
What did you think of the president's speech?
You know, I thought it was long on words and short on details. I think that, you know, there's some themes out there that every American would agree with in terms of equality, in terms of opportunity. But I think that the devil is in the details in terms of how you get there, and I didn't see a lot of flesh out in terms of how we might get there.
The president 3 times said that he would act without Congress.
I think that's a real mistake. I think that our founding fathers were really deliberate about setting up a system of checks and balances, a system that forced all of us to talk to each other whether we wholly agreed or wholly disagreed on a given subject. And this idea of acting unilaterally is really at odds with that constitutional tradition that our country has enjoyed for 200 years. I think it's a real mistake.
When you were here last time, have you seen a change in partisanship?
It's still too early to tell. You know, I'm about 6 months into it, and I would say the easy answer is yes, but a lot of the conversations that take place on the floor are very much the way they would have been, you know, 13 years ago, almost 20 years ago. So I would say let me gather a few more facts over a few more months, and I'll have a fuller answer. At this point, the quick answer is yes, but I think as you get deeper into it, I'm not so sure.
And finally, the president said, quote, climate change is a fact.
Well, facts are debatable things in Washington, D.C. I think that it is a fact that the climate may be changing. The question mark as it relates to policymakers in Washington, D.C. is, what's the cause? Is it wholly man-made? Is it partially man-made? You know, where are we on that continuum? And I think that that has a lot of offshoots with regard to policy that are going to be debated here in Washington.
Mark Sanford, welcome back to Washington. Thanks for spending a few minutes with us here on C-SPAN. We appreciate it.
Thank you, sir.
And we will get to you in 1 second, I promise. I promise. Thank you for stopping, Congressman Kildee. Kevin Brady is joining us next. You can see it's quite a scrum here in Statuary Hall. A lot of media folks, a lot of members of Congress. Our friend Sheila Jackson Lee is going to be joining us as well in a few minutes. But right now, Kevin Brady, who is chair of the Joint Economic Committee, Republican of the great state of Texas. Congressman, the president used the word investment quite a bit tonight.
Yeah, unfortunately in Washington that normally means spending, directed by the government, and oftentimes just doesn't hit the mark. I think that's one of the reasons the stimulus failed, while a lot of the benefits of all the spending has really gone to Wall Street rather than the middle class. So I think we need a change in course.
Where did you agree with what the president had to say?
You know, I think we can work together on trade issues and expanding our ability to sell around the world. You know, increasing training. I mean, the way we skill up workers in America really is pretty poor. And finally, lowering that backlog for veterans, especially those coming back from Iraq and Afghanistan, to get their VA cases determined. There's some common ground there.
So what happens? He's made the speech. What happens next?
You know, I think really the ball's in the president's court. And I think most Americans think the country's headed the wrong direction. The president said tonight we're going to stay that course. You know, I just think Republicans have a more positive vision, which really empowers people rather than the government. You know, we're willing to work with the president. You know, we're hopeful maybe he'll sit down and work with us.
You have two of your fellow Texans standing right next to you, Al Green of Houston, Sheila Jackson Lee of Houston. How often do you work with them?
Well, in the Houston region, we work together very closely between the ports of Houston, NASA, Texas Medical Center, the largest in the world. We have a lot of common interests, and I think we work together beautifully.
Kevin Brady, as always, we appreciate your time. Appreciate your doing the Washington Journal on a regular basis as well and taking calls. We have had Mr. Michigan standing here for quite a while. Dan Kildee, familiar congressional name.
Right.
His father represented the district. Uncle, I apologize. For how many years was he there?
He was there 36 years.
And you are in term number?
First term.
First term.
Yeah, just finished my first year.
What's your reaction?
Well, I mean, here in Washington, it's frustrating at times. Obviously, tonight, the president laid out a vision that most of which I agree with. But this has been a frustrating first year for anybody who really wants to get things done. I think the president shares that frustration. His comments about his willingness to act and use the executive authority that is vested in him through the Constitution is one that I think he ought to take up.
He had your fellow Michigander, Mary Barra, sitting up in his box.
That's right.
GM.
She went to college in my hometown of Flint, Michigan. It's really good to see her in that position.
How's the auto industry doing in Flint?
It's recovering. It's slow. You know, the president spoke tonight about expanding his manufacturing innovation institutes. That's the kind of thing that we need to do to grow our manufacturing base. Just wishing that we have a strong manufacturing base isn't enough. We need to make the investments to create the opportunities there. And I think in a place like Flint, it's going to take that kind of help. And the president expressed that tonight.
To quote the president, climate change is a fact.
Well, it is. It is. I mean, now, of course, a lot of folks back home right now where it's 7 below zero wonder about it. But as my daughter says, if you're wondering about cold weather and climate change, there's a reason you're not a scientist.
The Representative Kildee, doesn't climate change affect manufacturers?
Well, yeah, clearly, the entire environment affects manufacturers, no question about it. But what we're talking about here is how the auto industry can make the transition to be cleaner and greener. And in my own hometown, for example, we manufacture a portion of the Volt engine that supports that hybrid Volt vehicle that GM makes. That's the way manufacturing can not only help advance the economy, but also do so in a way that protects the environment.
Dan Kildee, Democrat of Michigan, representing Flint. Thank you for spending a little time on C-SPAN.
Yeah.
We are in Statuary Hall, and as you can see, it's pretty crowded right now with lots of members of Congress, lots of members of the press here. 1807 to 1857, this room served as the House of Representatives for the Congress. 5 presidents have been inaugurated in this room, and 1 died in this room, and that was John Quincy Adams. Al Green of Houston. First of all, Democrat, what committees do you serve on?
Financial Services, and I serve on the subcommittee of financial institutions, and I am on the ranking member on oversight and investigations.
From that perspective, from that perch, what did the president say tonight that you agreed with or disagreed with?
Well, I agreed with the president on something that's very important, not necessarily from financial services, but raising the minimum wage. He said that he was going to take action, and he said he'd raise it. And I think that's important. I think that we have a bill in the House that can raise it, H.R. 1010, to raise it to $10.10 an hour. The president mentioned that bill. But it's important for us to raise the wage, and I'm looking forward to working with my colleagues in the House to get it done.
Will that cost U.S. taxpayers money?
Raising the wage does not require, as the president said, any additional bureaucracy. It merely requires that we give persons who are working, many of them below the poverty line and working full-time, an opportunity to lift themselves out of poverty. It'll help employers because they'll have a workforce that's going to be better trained, because when you pay people more, you want to keep them longer, and they'll want to stay with you longer. They'll be more productive for you. And they will spend that raise in the community, which will create more jobs. So it does have a domino impact that's positive.
But what do you hear from your business owners in Houston that say, I can't afford this? I'm cutting it pretty close right now.
Well, I don't hear that from all of the business owners. I do hear some who say that they're cutting it close, and I appreciate their positions. But there are others who think that we can do this. Other states have done it. In fact, the minimum wage should be indexed so that in the years out, we can anticipate that it will keep the persons who are working full-time above the poverty line. This is America. We're the richest country in the world. 1 out of every 60 persons is a millionaire. 1 out of every 11 households is worth about $1 million. We had a man in 2007, 8, or 9 who made $3 billion. I'm accurate about the $3 billion. That's $400 a second. If we can pay a guy $400 a second in the richest country in the world, we can pay a minimum wage worker $10 an hour.
Al Green, the all-of-the-above energy policy of the president that he talked about tonight, how has that affected Houston?
Well, it's positive for Houston, because when you say all of the above, when the president says that, I take him to mean all above the ground and below the ground. I think we're talking about green energy, but I'm also talking about the Keystone Pipeline. I haven't given up on that, and I think the president will eventually come around, and we're going to get the Keystone Pipeline. It means a lot to Houston, means a lot to this country. So I think all of the above is a good policy. We do need green energy. There's no question about it. We got to transition more to green energy, but we cannot give up on fossil fuels, and we still have a lot of natural gas. So all of these are good things for Texas.
Al Green, Democrat, sixth term?
Actually, I'm into my 5th.
That was close.
All right.
Thank you, sir. And Congressman Meeks, if you could hold on for 1 second, I apologize. Let's let ladies go first. Our friend Sheila Jackson Lee has been standing here. We're kind of on a Texas run right now.
Okay.
This will be our 3rd Texan in a row. Let's start there, because you also represent Houston.
I
do. The energy policies of the president. Are you supportive of them?
Well, I think the fact that the president said all of the above fits Houston well. Obviously, we are an oil and gas economy, but we are also a solar economy, a wind economy. I think that the energy industry is an economic engine for this nation. And I think the president recognized it, having been very responsive to deep water drilling. The overhaul after the tragic BP oil spill has been, I think, welcomed by the industry. And it is a job creator. And the president has worked with the industry to create and increase more jobs. But I think the overall point of the message tonight for Houstonians was an inspirational roadmap for the 21st century. It's one of the best State of the Union addresses that I've heard, and certainly one of the best that President Obama has rendered. It was strong. It was responsive to the needs of the American people. And I think his authority is not arrogant authority, abusive authority. It is simply to respond to the needs that have to be addressed in the immediacy of the next couple of months.
Sheila Jackson Lee, as always, it's a pleasure to see you on State of the Union night. Did you get an aisle seat?
Well, I do, and I do so because there's a lot of work that gets done when I'm speaking to cabinet officers, making sure that they're aware of the needs of Houston, inviting them to the district. I've got about 3 or 4 secretaries now scheduled to come to the district, and that works very well. I do want to add something that I hope was very pointed in his message, and that was about women. When women succeed, America succeeds. But the idea of universal pre-K, I think, was just stunning for women and children across America. It is vital, and the increase in the minimum wage and pay equity has to be a major step forward for changing the economy as it relates to women, who many of them are breadwinners and single heads of household, it makes a difference to know the President is concerned about your values and your needs.
Sheila Jackson-Lee, thank you. Thanks for stopping by.
Thank you.
And from Texas to New York, Gregory Meeks, a Democrat of, I want to say Brooklyn, Queens. Queens. All right. So, yep, we got it right here. We are in Statuary Hall, just getting a little bit positioned here as we talk with members of Congress. Congressman Meeks, what did you find in the President's speech that made you stand up and cheer?
Well, number one, the fact that he stood up for the Affordable Care Act. I know how it has helped several individuals in our district, and he showed he's not backing away from it because we had a poor rollout, but we know overall that it's going to serve and help millions of Americans, as those that he described in his speech. When I think about individuals who have been cut off because of a pre-existing condition, and that no longer can happen, when I know the number of young people who are now still have health care because they're allowed to stay on their parents' health care, when people have not been capped out and people have not gone bankruptcy, it's important that we push forward and move forward. If there are individuals that have something they want to add to it, let's do it. But let's not keep playing games in Washington, D.C. 49 times trying to vote to get rid of the Affordable Care Act. I think that was significant on his part to show that this is what he believes in and he's moving forward. Of course, along with trying to make sure that we put an end to the inequities as far as wage gap and helping those who are on the bottom, getting them the minimum wage. That's tremendously important. Finally, I'd also say, because I'm on the Foreign Affairs Committee also, the fact that we're finally getting out of the longest war that we've been in the history of the United States, getting out of Afghanistan, we're out of Iraq, and using diplomacy to help us with Syria and Iran. And, I think that is tremendously important so that we don't have to get engaged. Hopefully, we have some successful negotiations so that we can eliminate the possibility of having to re-engage in another costly war that cost American lives. So I think that was significant, and I think that's a move forward in a blueprint of how we should continue as a country.
He didn't address Syria policy.
Well, he said that we're going to stand with those Syrians who are the rebels who are against terrorism and terrorists, and we want to make sure that those individuals are free. There's current negotiations that are taking place right now with our allies, and so I don't think that he wanted to step on that. The fact of the matter is we are currently within or in negotiations, and let those negotiations take place. He mentioned, I think, what he had to mention while we're doing that. That's why, for example,
Quorum call be dispensed with.
Without objection.
Madam President, I rise today in opposition to Senate Bill 1926. In July of 2012, after over 7 years of negotiation here in the Congress finally passed the Biggert Waters Act, the first significant flood insurance reauthorization bill since the creation of the flood insurance program in 1968. Madam President, one of the goals of the reforms at that time was to ensure, that the 5.6 million flood insurance policyholders in this country could collect on their policies if they were ever to suffer a flood loss, something that cannot be guaranteed by a flood insurance program that's currently $25 billion in debt. The program basically is bankrupt and only operating by the grace of the American taxpayer. Historically, Madam President, the flood insurance premiums have not covered costs because the program was not designed to be actuarially sound. Essentially, it was flawed from the beginning when it was created in 1968. The National Flood Insurance Act of 1968 authorized subsidized rates to encourage participation in the flood insurance program, especially for properties in high-risk locations. The Biggert Waters legislation changed all this by requiring that the program be actuarially sound, that flood insurance rates reflect actual risk, and that the program eliminate its debt. The sponsors of the legislation before us now have said that the moment Biggert Waters was signed into law by the President, they began working to roll back the reforms before they had any clear knowledge of how the changes in that legislation would be implemented, how mapping would affect homeowners, how flood insurance rates would change, or who might be pulled into the program and who might be pulled out. If my colleagues are hoping to decimate the flood insurance program, then they should support this legislation, because that's exactly what it will do. However, if they're looking to address the unintended consequences of Biggert waters, then we should take a more measured approach, like we do on most legislation. If there are affordability concerns that they're seeking to address, then I think we should find a way to address them. If they're attempting to address economic impacts that were not contemplated in the Biggert Waters Act, then we should find alternative approaches that minimize those impacts. If they believe that the rate at which Biggert Waters phases in risk-based premiums needs to be reconsidered, then we should discuss alternative increases. Unfortunately, Madam President, this legislation does not specifically address those issues. Senate Bill 1926, coupled with the provision that the sponsors included in the recently passed Omnibus Appropriation Act, will stop all changes in the federal flood insurance program that we know. Those efforts will ensure that mapping revisions, which we desperately need, do not move forward, that premium increases are halted, and even more disturbing, that homeowners never truly learn their real flood insurance risk. I believe people in America deserve to know the cost and risk of where they live. And, Madam President, taxpayers deserve to have those who choose to live in harm's way assume their own risk. The proponents of this legislation want to continue to burden, I believe, an already overburdened and bankrupt federal insurance program. They're not seeking to address a few discrete problems with the flood insurance reforms passed in just 2012. Make no mistake, they want to stop it all. I concede, like any legislation, there are issues with the implementation of Biggert waters that were not anticipated. But those can be addressed in other ways that do not require the, quote, stop everything approach that the proponents of this legislation are basically advocating. Congress is often criticized for being unable to fix anything. Well, in 2012, we took a very significant step toward fixing the National Flood Insurance Program after 7 years of work. And now we have a bill before us that will undo virtually every reform that was enacted less than 2 years ago. Madam President, I urge the proponents of the bill today to follow regular order and to take this bill through the committee process where it can be debated and amended and where people can be heard. Absent that, I urge my colleagues to join with me in voting against this legislation in favor of a more measured approach, which will preserve what is needed in the Biggert waters legislation and in exchange only which needs to be changed. Madam President, I thank you and I yield the floor and suggest absence of quorum.
The clerk will call the roll.
Mr. Alexander.
Chu, Democrat of California. Where's your district, Congresswoman?
It's in Pasadena, California.
When you think about Pasadena and you think about the president's speech, how did it affect your district? What did you hear?
I heard a blueprint for changing America for the better, reducing inequality by job training, by making sure that there are unemployment benefits, by helping women, and really emphasizing that when women succeed, America succeeds. I heard him talk about immigration reform and the fact that it would reduce the deficit by $1 trillion over the next 2 decades. And that is very, very important for my area of California.
What about immigration?
Immigration reform is something that he was pushing, our president was pushing as something that we could compromise on, that indeed there already is bipartisan support for it, and he sent this message very strongly that we need to get it done.
Thank you for your time this evening. We appreciate it.
Thank you.
And on the Republican side of the aisle, Charlie Dent, member of the Appropriations Committee.
Yes.
Allentown, PA is his district. Congressman Dent, you're on the Appropriations Committee. The president used the word investment 10, 12 times. How did you feel about that?
Well, he acknowledged the fact that we passed a bipartisan budget agreement. I was supportive of that, and I was glad he acknowledged that. We brought regular order back to the appropriations process. That's a good thing. Although it's been pretty clear, though, we've actually lowered our overall discretionary spending each of the last 4 years. And well, I agree that we need to make smart investments. I do believe that it's imperative that he talks a lot about infrastructure, but truthfully, getting that money out to road and bridge construction is not that easy. We're not living in 1955 anymore when we started interstate highways, but we're going to need a lot more regulatory relief in order to make sure those investments in infrastructure can take effect much more quickly. And he acknowledged that he might try to do that.
And he said he would do it with or without the Congress, the regulatory relief.
Well, I was encouraged that he said he wanted to do something on regulatory relief as it relates to infrastructure. I thought his administration really, frankly, wasn't very interested in providing that kind of relief. A lot of us have some very real suggestions about lessening the NEPA process, if you will, so that we can get to construction much more quickly, particularly with respect to bridge replacement. I hope that's what the president was referring to. At times, I thought the president, on the one hand, was conciliatory, and at other times he was, I thought, a bit overly confrontational, specifically on Iran. I mean, rather than saying to Congress, you know, we're negotiating with the Iranians, we're trying to get a good deal, I would respectfully ask you not to move forward on sanctions at this time. He threw down the gauntlet and said, if you pass a sanctions bill, I will veto it. He just challenged the Congress, and I thought that was overly confrontational and unnecessary. So at times he was conciliatory, and other times I thought he was a little bit too much in your face. And there's another issue, too, that I guess disturbed me a little bit. You know, he talks a lot about income inequality, and we have more of it. He talks a lot less about economic growth, and we have less of it. And I felt that the president, you know, was at times on those issues, he was you know, saying that his solutions were increasing the minimum wage and extending emergency unemployment benefits. Now, I have my own proposal on emergency unemployment benefits tied to job creation. But the fact of the matter is, whether you're for or against raising the minimum wage or extending emergency unemployment benefits, they are not a job creation policy. I don't think he focused enough on that. On energy, it was quite clear the war on coal is still on. That was clear, although he did acknowledge that natural gas has been significant in lowering our overall carbon emissions, and I was pleased that he acknowledged that fact, and so that was somewhat encouraging from my perspective. But again, I heard a lot of the same old ideas, but repackaged and rebranded for tonight.
Tell us about the economy of your district around Allentown.
Yeah, the economy of my district is, you know, we're doing all right. I mean, that's all I can say. We're not. It's, you know, the recession in 1983, I mean, was enormously traumatic because we lost Bethlehem Steel at the time. And it was really quite devastating. Unemployment rates were over 12%. This recession certainly has been very hard. Our economy is a bit more diversified in the Lehigh Valley area, and I have south central Pennsylvania too, out as far as Hershey. That economy has been a little bit more resilient. I would say to you that you know, we're getting through it. We weren't hurt as hard by the housing collapse as other areas of the country, but we still felt the effects. But our economy is a bit more diversified. We're coming through this better than most areas. The city of Allentown is a lot of investment in the city, over $500 million right now, and also city of Bethlehem seems to be doing very well, and the cities are rebounding. So I'm pleased about what I'm seeing in the valley.
Tell me when I'm wrong when I make these statements. You've been around here for a while in Congress. You're considered a moderate. You're from Pennsylvania. Am I correct so far?
Yeah, I'm a center-right congressman and a common sense conservative, centrist, whatever you want to call me, in a district that's it's a center-right district in a center-right country.
How has the mood? Is the mood here the same as it's always been in your time here? Has it changed for the better, for the worse?
Well, what I've noticed recently, there are a lot of folks who are stuck in their camps. We have people on the extremes on both sides that have a hard time getting out of the trenches. But what I found, at least during the government shutdown, is that it's okay to step out of the trenches. It's okay to get in no man's land. You're not going to get your head shot off. There are a lot of people out there, who want us to get some things done, who want us to work on problems and solve them. And so I feel like I'm actually much more encouraged today than I was a few months ago. I feel that we have a budget agreement. We got the appropriations bills done. It seems to me that there's a lot of space between those on the far left who say, all these fiscal problems are, if we just ignore them, they'll go away. I mean, that's the fantasy world. And we have some on the on the other extreme, who have a hard time getting the yes on anything. And so, but when you get beyond those two extremes, there's a lot of space there to get some things done. So I feel better today than I have, at least over the past year.
Charlie Dent is a Republican from Pennsylvania, and the former Representative David Dreyer once thought I was him on an airplane, and chatted me up for a long time until he figured out I wasn't you.
He thought you were me? Or, oh, he thought you were David Dreyer. Okay, well, thank you. Very good.
Thank you, Congressman. Your fellow Pennsylvanian, now here in Statuary Hall again. Statuary Hall, right off the House chamber, served as the House of Representatives for 50 years, 1807 to 1857, for the House until the current chamber was built. And joining us now is another Republican from Pennsylvania, Lou Barletta. Did I say that correctly? Are you a first-termer?
No, this is my second term.
Second term, so you've been around here for a couple of years. First of all, what's your impression of Washington, being a former mayor of Hazleton, PA?
It's very difficult for me coming here as someone who needed to pass a budget by law every year, pass a balanced budget. Someone who had to work with city council to get things accomplished and make decisions and move on. So it was a culture change for me to come here, very frustrating in my first term.
What did you think of the president's speech, Congressman?
Well, the main issue for everyone back in my district is the economy and jobs. The president didn't offer anything new to satisfy me, and that things will change. I personally believe, as a former, not only a mayor, I was a businessman, an entrepreneur before I became mayor. The president didn't touch on the important issues that are really killing the entrepreneurial spirit in this country, and that's the uncertainty that Washington's creating. Uncertainty like the tax rates. Just last December, we didn't even know what the tax rates were going to be for this year. The president didn't talk about regulations and how they're killing small businesses, not helping small businesses and entrepreneurs, and the fact that the Affordable Care Act has continued to add more uncertainty to the economy. So when the president said that we need to invest in small businesses and help entrepreneurs, it's his exact policies that are hurting them.
What committees do you serve on?
I serve on Transportation and Infrastructure. I'm on Homeland Security and on Education and Workforce.
When it comes to education, the president is pushing a plan for pre-K.
I agree, absolutely. I think it's very, very important. We need to get to these children early, and that was one area where I did agree with the president.
The president used the word investment quite often.
That's spending. He tried to convince the American people that we are better off today than we were when he took office, although our debt is now $18 trillion, and we're talking about more investment or more spending. Rather than getting our house in order here, cutting out the wasteful spending and cutting out some of the waste that goes on here in Washington and getting our finances in order, really making Washington more efficient, starting to run it the way the private sector would run their business in hard times. Washington hasn't gotten that memo yet.
Representative Lou Barletta, thank you, sir.
Yes, sir. Joe Manchin.
Live on C-SPAN now, Senator Joe Manchin, Democrat of West Virginia. Senator Manchin, first of all, what was your impression overall?
Well, there's a lot of encouraging points and encouraging message there. And there's some things that are still challenging, very challenging to me in the state of West Virginia on energy. And it looks like still the war on fossil or coal, if you will. And we've got to get together where we're a nation that basically embraces everything we have to have the balance between the economy and the environment to make sure we can produce energy this country depends on and not rely on foreign oil or foreign energy whatsoever. So that was concerning. But the incentives about we're going to reward people with tax incentives if you can create a job. And it's all about jobs.
Phone call be initiated.
Without objection.
Thank you, Madam President. I would also ask unanimous consent that at the conclusion of my speech that Senator Reed from Rhode Island be the next Democratic speaker.
Without objection.
Thank you, Madam President. Madam President, I come to the floor to speak against the Coburn Amendment. Now, I know that the good senator from Oklahoma hasn't brought this amendment up yet, but this is the time of which I have available to speak to it. If he doesn't bring it up, God bless him, but if he does bring it up, hopefully these comments will be able to impact some of the members of this body. But before I talk about that amendment, I want to thank Senators Menendez and Landrieu, Isaacson, for including legislation that's very important to Senator Johans and I in this important flood insurance bill. Title II of the underlying bill is actually the National Association of Registered Agents and Brokers Act, or as I refer to it as NARAB. NARAB is legislation that Senator Johans and I introduced last year. It creates a nonprofit association to provide one-stop licensing for insurance agents and brokers operating outside of their home state, while also fully preserving the authority of the state insurance regulators to supervise these markets. Currently, an insurance agent or broker seeking to operate in multiple states must meet different state-specific licensing requirements for each state and seek approval from each state's jurisdiction. This process can be time-consuming, costly, redundant, and sometimes contradictory without providing any greater consumer protection. That's a big disincentive for agents and brokers who try to grow their business. This is not a new issue for the insurance agency. Congress recognized the need to reform the insurance licensing system 15 years ago, back in 1999, when it incorporated the National Association of Registered Agents and Brokers subtitle into the Gramm-Leach-Bliley Act. Unfortunately, during consideration of the Act, Congress did not provide for the immediate establishment of NARAB. Instead, it included provisions to simply encourage state reciprocity for licensing. As a result, Gramm-Leach-Bliley wasn't able to achieve the level of reciprocity and uniformity that Congress had hoped for. And these efforts became something of a dead end. And that's why we're here today considering this important legislation. Title II would provide insurance agents and brokers with the option of becoming a member of NARAB, provided that they meet professional standards set by the association and undergo a criminal background check. NARAB will streamline the licensing process for agents and brokers, enabling them to be licensed once under a single high national licensing standard, rather than follow different state standards. This will save time and it will save money. The association will set rigorous professional and consumer protection standards, including the requirement that all association members undergo criminal background checks and, for the first time, continuing education standards for non-resident producers. In addition to setting rigorous professional standards, the association will let agents and brokers renew their license all at once and fully preserve the ability of regulators to protect consumers, supervise and discipline agents and brokers. Now, currently, on average, insurance agents sell their products in 8 states, with many of them serving even more than that. A one-stop licensing compliance mechanism will benefit all agents and brokers, but particularly the small guys, the small agents and brokers who must spend time and money dealing with different standards in different states. A one-stop shop for insurance licensing will help smaller players compete against the big competitors. More opportunity is good for small business, and more competition is good for consumers. However, the amendment that I referred to in my opening that may be offered by the good senator from Oklahoma would render NARAB meaningless by giving states the authority to ignore NARAB's cross-state licensing abilities. The concept of NARAB was first developed when Congress passed Gramm-Leach-Bliley in 1999. But again, the measure wasn't able to achieve the level of reciprocity and uniformity that it hoped for. Title II represents over a decade worth of effort, and I believe will finally achieve the goals laid out in Gramm-Leach-Bliley in a way that ensures that regulators can continue to protect consumers. Now, I appreciate and understand the concerns of my friend from Oklahoma, and I share his interest in making sure that we preserve states' rights. But I also want to make clear that we tried providing an opt-out for states when Gramm-Leach-Bliley was implemented 14 years ago, and with all due respect, it simply did not work. That's why we're here today debating this bill. Let me just take a minute and talk about how this legislation protects states' rights. Every state would retain all authority to license its resident agents and brokers. The association would be required to notify states when agents and brokers apply for membership, letting states notify NARAB of any reason membership should not be granted for a producer. Additionally, because the association would be in communication with all state insurance regulators, this notification measure will prevent bad actors with violations in one state from simply moving to another state because the record would now follow them. States will also have significant control over NARAB. The nonprofit association would be governed by a board of directors dominated by state insurance regulators and chaired by a state insurance regulator. The senator from Oklahoma's amendment also implies that this legislation somehow imposes unfunded mandates on states or compels states to take some action, and this simply isn't the case. The legislation also ensures that states remain responsible for the oversight and day-to-day regulation of the insurance marketplace. States will maintain exclusive control over regulation and marketplace activities, consumer protection requirements, unfair trade practices, and other important areas. Under this bill, we preserve the long-standing authority of states to supervise insurance producers. Any agent or broker who obtains the authority to operate in a jurisdiction through NARAB is still subject to the full regulatory authority of that state and must comply with all marketplace requirements. And under our proposal, we ensure that states will continue to receive insurance licensing fees, which will be collected by NARAB and remitted to the states. This legislation is strongly supported by the National Association of State Insurance Commissioners and the National Association of Insurance and Financial Advisors, the Council of Insurance Agents and Brokers, and the Independent Insurance Agents and Brokers of America. And its purpose is thwarted if the good senator from Oklahoma's amendment is adopted. If NARAB cannot offer producers the ability to fulfill their licensing obligations in all jurisdictions, then membership in NARAB offers very little value for those agents and brokers who would otherwise participate and would create uncertainty about whether individual states might opt out in the future. So I would urge my colleagues, if the good senator from Oklahoma decides to bring up his amendment, to oppose that amendment. With that, Madam President, I would yield the floor.
President.
The senator from Oklahoma.
I'm waiting on Senator Menendez to come to the floor on a budget point of order, but I will ask that the unanimous consent to temporarily set aside the pending amendment, so I may call up my amendment 2697.
Is there objection? Without objection.
And
the clerk will report.
Thank you.
The senator from Oklahoma, Mr. Coburn, for himself and Mr. McCain, proposes an amendment number 2697.
I ask the amendment be considered as read.
Without objection.
I see Senator Menendez is now on the floor, and what I would like to do is talk a little bit about this bill. This bill is going to add $900 million in additional budget authority and outlays over the next 5 years with no offsets, period. The sponsors claim the bill is offset over 10 years that relies on a budget gimmick that assumes that Congress would not raise the NFIP borrowing authority once it hits the cap. That's never happened. And in the absence of sufficient borrowing authority, the program would delay payment of insurance claims until additional resources became available. So in reality, this bill will add another $2.1 billion in debt to the NFIP while making no substantive changes to address affordability issues. Even the administration states that delaying implementation of these reforms would further erode the financial position of the NFIP, which is already $24 billion in debt. This delay would also reduce FEMA's ability to pay future claims made by all policyholders. NFIP is unaffordable to the American people as the current program is currently already more than $24 billion in debt. Madam President, the pending Measure S. 1926, a bill to delay the implementation of certain provisions of the Biggert-Waters Flood Insurance Reform Act of 2012 and to reform the National Association of Registered Agents and Brokers and for other purposes, would violate the Senate pay-go rule and increase the deficit. Therefore, I raise a point of order on this measure pursuant to Section 201A of S-Con Res 21, the concurrent resolution of on the budget for fiscal year 2008.
Madam President.
The Senator from New Jersey.
Madam President, pursuant to Section 904 of the Congressional Budget Act of 1974 and the waiver provisions of applicable budget resolutions, I move to waive all applicable sections of that act and applicable budget resolutions for purposes of the pending bill, and I ask for the yeas and nays.
Is there a sufficient second? There appears to be. The yeas and nays are ordered. The motion to waive is debatable.
Madam President.
The Senator from Oklahoma.
This country is in serious trouble with its debt, its unfunded liabilities, and its continuous habit by its elected representatives to not live within its means. Waiving the Budget Act so that we can delay a reform on something that needs to be reformed does not make sense. I have no doubt I won't win this budget point of order, but the American people need to be paying attention. Here we go again, not doing the hard, tough work of making choices about priorities. And so we passed a bill, the Biggert-Waters bill. It was signed into law, and now because it's starting to come into effect, we're going to delay it for 4 years. It's going to cost billions. And then we're not going to solve the problem. And don't forget, this is not about keeping Biggert-Waters intact. It's about making it go away. That's what it's really about. And I'm adamantly opposed to the waiver of the Budget Act, and I will wait the call of the chair on the vote. I yield back.
Madam President.
The Senator from New Jersey.
Just briefly, I appreciate my colleague from Oklahoma's longstanding views on a variety of fiscal issues, but on this one I must say that I have a disagreement with him. This isn't about doing away with Biggert-Waters, because the reality is that the 1% of properties that equal 33% of all of the claims, there is nothing set aside for that 1% that creates 33% of all the claims. It remains as it existed in Biggert-Waters. As a matter of fact, overwhelmingly, we keep most of the Biggert-Waters reforms in the legislation. The one thing that we are doing is creating a pause for those property owners who have obeyed the rules, followed their responsibilities, built to new standards, and now find themselves, notwithstanding having done all of those things, that they're in the midst of a lot of hurt, rate shock, that in fact some of us foresaw, as is evidenced by the fact that I raised these issues as a member of the Senate Banking Committee, where this bill was heard, and when I couldn't achieve any affordability elements, I got an affordability study included, whose study should be completed before we actually put into force skyrocketing premiums that are going to what? Create greater stability for the fund? No. What's insurance about? Insurance is about spreading risk over a wider pool.
So what happens when the many stories that many of our colleagues on both sides of the aisles have come to talk about on the floor, which is people who just can't simply meet that skyrocketing premium, and in essence have to say, I can't have insurance, or I'm going to turn my house over to the mortgage company because I can't sustain that, or we'll have to sell at a fire sale. So what happens then? The pool grows smaller. What's the consequences of the risk pool growing smaller? Prices rise. And when prices rise even more for everybody else, what happens again? The risk pool grows smaller. And then the risk pool goes smaller, the prices rise again. So this isn't about undoing Bigot Waters. On the contrary, this is about getting it right. This is about fulfilling the element of the law that said there must be an affordability study so that we can determine what type of affordability mechanism would exist in the law, so that we can ultimately make sure that we have a solvent program and at the same time be able to keep the single most significant asset that any family has in this country, which is their home. And so that's what we're trying to do here, and that's why I urge my colleagues on both sides of the aisle to support the waiver of the budget point of order, and I yield the floor.
Madam President.
The senator from Louisiana.
Madam President, I understand that Senator Reid has been waiting to speak about his amendment, and the unanimous consent allows that. I would like 30 seconds to respond to the Colburn amendment, and I see the senator from Tennessee. I'm not sure what brings him to the floor, but if I could have 30 seconds to respond to the Colburn amendment.
Is there objection? Without objection, the senator from Louisiana.
I want to underscore what the senator from New Jersey just said. If our efforts were to repeal the Bigot Waters bill, we would have drafted one to do so. This is not repealing Bigot Waters. This is an honest, good faith attempt to make the flood insurance program work. So we are insisting that the affordability study be done first. We're insisting that the maps be accurate, and we're insisting that FEMA recognize levees that taxpayers have built at their own money. Is that too much to ask? I mean, think about that. An affordability study to recognize levees that are built and to, make sure that people can afford these rates. I know my 30 seconds is up. I would urge my colleagues to vote against the Colburn point of order and to help us move this important bill to the House of Representatives with a strong vote.
Madam President.
The senator from Rhode Island.
Madam President, I would first ask unanimous consent that Ellen McLaughlin, a fellow in my office, be granted the privilege of the floor for this session of the 113th Congress.
Without objection.
Thank you very much, Madam President. Madam President, I now ask unanimous consent to set aside the pending amendment to call up my amendment number 2703.
Is there objection? Without objection.
Thank you, Madam.
The clerk will report.
The senator from Rhode Island, Mr. Reid, proposes an amendment number 2703.
Madam President, I would ask unanimous consent to waive the reading of the amendment.
Without objection.
Thank you, Madam President. Madam President, my amendment would require the Federal Emergency Management Agency, FEMA, to study and report on the advisability of establishing voluntary community-based flood insurance policies under the National Flood Insurance Program, the NFIP. The Government Accountability Office would be required to review and comment on FEMA's study. The study will help answer important questions about how such voluntary community-based policies could be implemented within the National Flood Insurance Program. It does not commit FEMA, the Congress, or local communities to take any action. It simply calls for fact-finding and analysis that could provide the basis for improvements to the flood insurance program. The idea of community-based flood insurance is to assess the risk for all properties within a community and collect premiums from the community rather than from individual property owners. By purchasing insurance at the community level, willing local governments, and I'll emphasize willing and voluntary, may be able to spread the cost of premiums equitably among property owners. In addition, they may be able to increase participation in the flood insurance program, including among property owners who are within the 100-year floodplain, but who are not subject to the mandatory purchase requirements because they do not carry a federally backed mortgage. Expanding participation would ensure that all properties in the floodplain have coverage from risk. Beyond increasing coverage and participation, community-based insurance may also offer new opportunities and incentives for communities to deal with affordability, including by undertaking mitigation efforts that will reduce risk and insurance costs. Indeed, the amendment specifically requires FEMA to develop a strategy that incorporates mitigation into its recommendations for community-based policies. For communities in Rhode Island and along the East Coast that are dealing with the aftermath of Hurricane Sandy and the reality of sea level rise and climate change, this could offer another tool to prepare. There are important questions to be answered about the feasibility of such an option and how it might be offered. That is what this amendment seeks to do. A study of this option has been included in separate amendments in bills sponsored by proponents and opponents of the underlying bill, and it has been approved by the House twice as a freestanding bill. Indeed, it has been part of bills or amendments sponsored or co-sponsored by Chairman Johnson, Senator Crapo, Senator Shelby, and Senator Landrieu. I want to thank the managers and the authors of the underlying bills, Senator Menendez and Landrieu and Isaacson, for their work. They have done an extraordinary job and working to ensure that my amendment could be considered. I believe this amendment will add to the goals of the underlying bill, of which I am a co-sponsor, and given the bipartisan support for this concept, I would hope it could be adopted by a voice vote. But before I yield the floor, Madam President, just one point. We have another emergency that is facing us, not only floods and rising waters, but unemployment insurance. And I would ask if we could continue this bipartisan dialogue we've had and salute my colleagues on the other side of the aisle who have been principled in their pursuit of this objective, and we can move on that issue also. And with that, Madam President, I would yield the floor.
I think we're up, right? Madam President.
Senator from Pennsylvania.
Thank you, Madam President. I rise to address the amendment that I have. I will formally ask to call it up in a few moments, but I want to say a few words about it. And I'd like to start by a little bit of background and reminder of how we got here and the circumstances that brought us to this point. And it all started, of course, with a completely unsustainable national flood insurance program. I don't think there's any dispute that this program is massively in debt. It's been completely underwater. It was insolvent, and there was no prospect for this to right itself because of the massive subsidies for homeowners of all stripes. By the way, in addition to being fiscally insolvent and therefore a huge drain for taxpayers, it has a lot of very bad incentives when you subsidize homes that are built in dangerous places. You subsidize and encourage homes to be rebuilt there, homes to be bought in places that are just dangerous and costly. And so there are problems inherent. The CBO was very clear about this. This program was not going to be able to honor its commitments. That's what happens when a program like this is insolvent and is unreformed. People who think they've got insurance for their home end up discovering one day that they don't because of its insolvency. And so along came the Biggert-Waters approach to reform the National Flood Insurance Program and to put it in a position where it would actually be solvent and it would actually be able to honor the policies that people are paying for. It was September of 2011 that the Senate Banking Committee took up the reforms. And they passed it with a voice vote. In other words, there was no dissent. There was no objection to the Biggert-Waters reforms. Now, that was, of course, after many hearings. This has been discussed at length for many years before we got to that point. But we did. We passed it in the Banking Committee. And in June of 2012, so less than 2 years ago, Biggert-Waters, the flood insurance reform program, was wrapped into another bill. It was the MAP 21, a transportation bill. It was wrapped into that, and it passed with overwhelming support. As a matter of fact, as it happens, every single Democrat who was in the chamber and who is a member of the Senate voted in favor of the bigger water reforms. I think in part because they understood that this program needed to be reformed. And I think we all believe that this program needs to be on a fiscally sustainable place. So the final passage of that bill, less than 2 years ago, required the reforms of Biggert Waters, which includes, as central to those reforms, that over time, everybody who participates in the National Flood Insurance Program will eventually be paying actuarially sound rates, rates that actually reflect the risk of their home, so that taxpayers wouldn't be on the hook and they wouldn't be subject to the worry about whether this program is going to go away altogether. So that's where we were when, lo and behold, we start to discover that for some people, premium increases are going to be very, very dramatic. I've heard a lot from Pennsylvanians. This is a problem with the Biggert Waters reform. One of the problems that I suspect a lot of folks did not anticipate was that the premium spikes would be quite substantial, and they'd happen over a pretty short period of time. There is a phase-in under the Biggert Water reforms, but it's quick, and it's very problematic for that relatively small handful of people who would be adversely affected, because it turns out that the remapping determines that they're in a higher risk profile than had previously been understood, or if they built their home prior to the initial mappings, they wouldn't be subject to the premium increase, but upon sale of their home, the premium increase would go into effect. And it would go into effect immediately, and that, of course, can have a devastating impact on the value of a person's home. So I want to just be very clear. There's no question in my mind that if we don't do anything, if we simply leave Biggert Waters alone, that has an unacceptable impact on people who are adversely affected in the form of premium increases that are way too big, way too quickly. And that's not the right outcome. We shouldn't settle for that. I know cases in Pennsylvania where people are facing thousands of dollars in increase. In some cases, it's immediate. In the case where they are going to be selling their home, the new buyer would face that immediately. In other cases, it's phased in very quickly. So the Menendez approach, the underlying bill that we're debating today, deals with this, but it deals with this in the wrong way. It deals with this by completely suspending all the reforms. It completely dispenses with the idea that we should move towards an actuarially sound program. It says for 4 years there'll be no change in premiums. Now, it's hard not to see this as a measure that's designed to kill the reform. And I understand that it's painful to have any premium increase, but to say that the response should be to abandon any effort to move to a fiscally sound, actuarially based program, that just can't be right. To do that is to completely throw out the reforms that took so many years to get there. And by the way, it doesn't provide any certainty for the homeowners that it's meant to protect. But for 4 years, nothing happens, and after the 4th year, nobody knows what happens. I know the intent for some to continue indefinitely without making any changes, but that is not a solution. This is an insolvent program. What that means is we will get to the day relatively soon, according to CBO, when the National Flood Insurance Program will simply be unable to honor the commitments that it's made. It will not have the resources. It will not have the borrowing authority. It will run out of money. And people who then get their home flooded will find it of little comfort that their premium was a little lower when it turns out there's no benefit to be paid. There is no resources for them to rebuild. So this just doesn't work. And it's not just me who observes this problem with the underlying Menendez bill. As a matter of fact, the President of the United States has weighed in on this, and I will have a quote here from a statement of administrative policy that they put out 2 days ago in response, directly referring to this bill, by identifying it by number. This is the bill they're talking about, the Menendez bill, and one of the things that they say is delaying implementation of these reforms. The reforms they're talking about are the Biggert Water reforms. Delaying the implementation of these reforms, as the Menendez bill would do, would further erode the financial position of the NFIP, the National Flood Insurance Program, which is already $24 billion in debt. This delay would also reduce FEMA's ability to pay future claims made by all policyholders. This is the President of the United States. His administration has looked at the Menendez bill, and this is their conclusion. This doesn't work. This doesn't work for policyholders. It doesn't work for taxpayers. It doesn't work for anybody. There's another problem that I would point out with the Menendez bill. It wouldn't work if it were to become law for these reasons, but it's not going to become law. The administration's made it clear they don't support it. The Speaker of the House has made it abundantly clear he will not put a bill on the House floor that guts the reforms of bigger waters. The chairman, the House chairman of the Banking Committee, who has jurisdiction over this, has made it abundantly clear he's not going to move a bill that does away with these fiscal reforms. So voting for the Menendez bill, if your goal is to do something to help homeowners who are facing premium increases, a vote for the Menendez bill does nothing, because that bill's going nowhere. The administration wouldn't support it, doesn't support it. They've said so. The House is not even going to take it up. So if your goal is to do something for constituents who are facing a big premium increase, and that, frankly, that is a big part of my goal, the Menendez bill doesn't cut it. That's going nowhere. What the administration said would work, and what House leadership are willing to work with us on, would be to phase in these premium increases more gradually, because everybody acknowledges the premium increases are occurring too quickly, and that needs to change. So this is another quote from that same statement of administration policy on that same bill. What they said was the administration strongly supports a phased transition to actuarially sound flood insurance rates. Now, they didn't refer to my amendment, but this is exactly what my amendment does. It phases this in gradually so as to minimize the pain, allow people an opportunity to adjust, allow people the time to maybe mitigate the risk, and still maintain the integrity, the fiscal integrity of the program so that it actually can pay the claims that will be submitted to it, that surely will be submitted. Let me just run through quickly exactly what the amendment does and doesn't do, because there's been some confusion about this. Our amendment actually retains very significant portions of the underlying Menendez bill, because parts of it made a lot of sense. So Section 1 is just the title. Section 2 of definitions unchanged. Section 3 is where we phase the premium increases in gradually rather than suspending them altogether. That's the big difference. Section 4 of the Menendez bill is an affordability study and report. It requires FEMA to complete this study, as Bigger Waters does, within 2 years of the enactment of the bill. We leave that intact. I think that's a good idea. We need that. My amendment would not affect that whatsoever. The Menendez bill also provides some funding, additional funding for the affordability study. It lifts the cap that was set before. My amendment wouldn't change that. I think that we need to lift that cap. Section 6, this is a measure that provides funds to reimburse homeowners when they challenge the redrawing. So when a new map comes out and someone's house is deemed to be in a more risky place and therefore the premium is higher, a homeowner can challenge that. And if the homeowner wins under the Menendez language, which I support and stays in this bill under my amendment, the homeowner would be reimbursed the cost of that challenge. And Senator King from Maine had a very good suggestion, I think, which is if a community chooses to challenge the mapping because they think there was a mistake made, they think it was inaccurate and it adversely affects them, they too, that community too, would be reimbursed for its cost if it turns out to be successful in its challenge. I agree with that. We've incorporated that into our amendment. Section 7 addresses flood protection systems. This is a very important part of what the Menendez bill does. I fully support it. And that is this. Under current law, one of the problems is in order for a community or a homeowner to fully benefit from risk mitigation that they may have done, a levee that may have been built or a dam or some other risk mitigation. In order to fully benefit from that, the federal government has to have paid for some portion of it. That's ridiculous. What difference does it make who paid for it? If it's been built and it's providing protection, that's all that should matter. This language would achieve that. The Menendez bill achieves that, and my amendment incorporates that. We keep that intact as well. Section 8 treats flood-proofed residential basements, addresses that. Our amendment doesn't change that. Section 9 creates a designation of a flood insurance advocate. Again, my amendment makes no change to that. Section 10, Senator Blunt had an amendment that would change the remodeling trigger for loss subsidies from 30% to 50% of a home's value. We incorporate Senator Blunt's amendment into our own, so that's there. Senator Hagan had an amendment to exempt escrow requirements for flood insurance payments. We fully incorporate that into my amendment as well. Senator Rubio had an amendment also that was accepted by the managers. It's in ours. So really what it comes down to, the difference between my amendment and the Menendez approach is, one, keeps us on a path of reform, keeps us on a path to an actuarially sound, fiscally responsible flood insurance program, whereby the flood insurance program is actually able to pay its claims. And the Menendez bill dispenses with it. It dispenses with the most important, most fundamental reform. The other part that we do is we soften the blow. If your concern is with these homeowners who are facing these huge premiums, my amendment's the only way that we're going to actually achieve that help for those folks, because this is the only legislative approach that has a chance of actually becoming law. By the way, in addition to its problems with the other body and the administration, the Menendez bill is subject to a budget point of order because it increases our deficit and forces more government borrowing, subject to a point of order. I don't know that it can sustain that. I don't know it can defeat a budget point of order. And that's an important issue. Because our approach is fiscally sound, we're not subject to a budget point of order. What we do is we say, sure, the longer delay in the phase-in of the premium increases costs the flood insurance program some money until you get to the point where people have reached the level where they're paying actuarially sound rates. But we fully offset that with a very modest surcharge on all flood insurance policies in the country. It's about $40 per year in the first year, the most expensive year, unless your income is over $500,000 a year, in which case it's about $80. That's it. And it goes down after that because over time, as the higher premiums gradually are phased in, the loss to the program is diminished, and therefore the surcharge goes down with it. But let's be very clear. The maximum that anybody would be paying is about $40 a year, unless your income is over $500,000 a year, in which case it would be $80 a year. Look, I'll just wrap up, Mr. President. I just think that we just can't continue to ignore all of the fundamental mandatory spending problems that we have. When we actually go through a long and painful and deliberative systematic process to reform a program, for us to then walk away within 2 years and say, never mind, we're not going to have any reform, is just so disappointing and irresponsible. We've got bigger challenges facing us. If we can't deal with this, I don't know what we're going to do. Again, I fully acknowledge that we've got to soften the blow for people who are going to face much higher premiums. My amendment does that. And the way we do that is by ensuring that nobody's premium could go up by more than 25%. In the case of people who would face a big increase, under my approach, it would take many years of gradual phasing in before they would actually be forced to pay that higher actuarially sound rate. If they think that rate is unfairly high, they can challenge it. Or they can leave the program and buy private insurance. They could do that too. But to suggest that we're going to just do nothing after having put the reforms in place, I think would be a big mistake. Mr. President, there are a lot of groups that are supporting my amendment. I've got a Got a list here I'm going to run through quickly. The National Resource Defense Council, the National Wildlife Federation, the Nature Conservancy, National Taxpayers Union, Taxpayers for Common Sense, National Association of Mutual Insurance Companies, the Reinsurance Association of America, American Rivers, the National Fire Protection Association, National Leased Housing Association, the R Street Institute, American Consumer Institute, Americans for Prosperity, Americans for Tax Reform, the Coalition to Reduce Spending, the Cost of Government Center, Councils for Citizen Against Government Waste, Freedom Works, the National Taxpayers Union, Taxpayers for Common Sense, the Taxpayer Protection Alliance. So as you can see, there's a combination of fiscal watchdog, folks that are very concerned about fiscal prudence, as well as people who are concerned about environmental integrity. There's other groups coming on continuously. As I mentioned, every Democrat who voted on the Bigger Waters reform voted in favor of it. What my amendment does is it preserves the integrity of the reform while softening the blow for the people who would be affected by it. So I think this is just a very, very important, although modest step in doing these two things. And Mr. President, I'm going to ask unanimous consent to temporarily set aside the pending amendment so that I may call up my amendment 2707 with the modification which is at the desk.
Without objection, the clerk will report.
The senator from Pennsylvania, Mr. Toomey, proposes amendment number 2707 as modified.
Mr. President, I note the absence of a quorum.